Good evening. This is Dwayne Lowry for the DPP Grain Desk on Sunday, April 8th. The outlook here for tonight, it's not a whole lot of news here to influence us. Friday, the U.S. released some jobs data that caused the stock indexes to decline on Friday and might help resurrect some hope that the Fed will come out with a QE3 program. Certainly nothing imminent, and certainly not any real belief that they can point to that this is definitely going to happen, but it becomes a talking point and on the disappointing jobs data. And I think that you might get a little support there. The weather in general is about the same theme we've had, which has been a generally favorable theme and weather outlook and forecast for the Midwest. The plains continue to get beneficial moisture. The southwestern part of the U.S. plains is slated to get moisture here during the next 5 days. There doesn't seem to be any major planting delay type of weather patterns developing. There doesn't appear to be any difficult terrain type of pattern that's developing for concern. In general, it looks like we've got a relatively favorable mix. The weather forecast tonight, this afternoon, versus last week going away might have a little bit of a cooler theme. Might see some frost temperatures in parts of the northern eastern Midwest, but you're talking about a minute number of fields that could possibly be impacted, and at this particular date, any field that would be impacted by corn being up out of the ground and getting the frost at this point and having to be replanted has no bearing whatsoever on final yield potential with the planting dates that we have at the present time. And all the frost would mean to that particular producer would be some added cost this year, but I don't think it has any impact on the market. So weather in general is still a favorable theme. Tuesday, the USDA will come out with their monthly supply and demand report. The trade has been expecting that figure to be bullish corn, dropping carry out 100 million bushels or more. They expect it to be supportive beans, lowering it from last month, but still being a higher carry out figure than we had a year ago, and still very adequate in terms of old crop supply. As far as wheat is concerned, carryout is expected to be lower, but statistically insignificant. You still have an abundant supply in the U.S. You'll still have an abundant supply scenario for globally, so there's not a statistically important figure that we're going to expect out of wheat. Wheat traders will be watching to see more what corn does. So the corn's expecting a bullish figure, and to a large extent this is priced in, but in the same token, the trade has a bullish bias in corn and has had for months, and they're probably going to go into this report looking for some sort of a firm tone into the report, and I don't see any reason to really argue with that idea. The soybean market is all about acreage. What's the final planted acreage going to be? We certainly are buying some soybean acres here, probably at the expense of corn, probably adding to ideas that we can get some additional double crop acres of beans, but we're definitely adding to soybean acreage at current price levels, partially on firm soybean prices and optimistic expectations about what soybean prices could do, and also partly on producer concern that, maybe the corn situation is different than it's been in other years. Maybe there is more downside risk. I've already missed opportunities to price corn, and so now that the producer can make sales on soybeans at the upper end of parameters, which is something he can't do in the corn, and I think those combinations of factors are leading to some increased soybean acres. So I think for tonight you're looking at probably corn steady better, wheat probably steady better, even though weather might be a bearish influence. I think the trade wants to be friendly, and nobody wants to sell this thing going into Tuesday's report. Beans could be a little bit more mixed, maybe even start weaker on ideas that Friday's late surge in settlement prices seem to be a little bit overdone. I also don't know why we should expect anything very noteworthy in terms of bullish reactions for soybeans out of Tuesday's report. So I think you may go on a stop hunting mission in beans to try to violate last week's highs, see if they can't get another round of short covering to unfold, but I don't think you're really going to go anywhere with it. Overall, I think over the next several weeks it's going to be weather that's going to dictate the major trend here. Tuesday is going to be the last round of bullishness associated with the quarterly stocks figure that came out on March 30th. And this will be a great opportunity for some sell the fact scenarios to unfold. And whatever the bull is looking to hope or gain out of these reports, this is pretty much going to come to a culmination event by Tuesday or Wednesday of this week. So early week strength is certainly a possibility, but I think overall outlook with favorable spring weather, early planting, large acreage, trendline yield scenarios that for next year paint a completely different picture for corn for sure, a still abundant, plentiful supply of wheat situation, and in terms of soybean, whatever bullishness you had from that acreage report, remember that's just a shot in the dark, and it's not the final number. And what's transpired over the last several weeks in terms of corn and soybean profitability, we're certainly going to be adding some soybean acres. So I think that you expect some early week strength and well-supported tone going into Tuesday's reports. But the bigger picture and outlook is for some declining price trends, prices below the levels that we were at before these March 30th reports. And I think you have to respect the downside risk here. So look for some slight early week recovery, maybe even initial post-report reaction to the upside, but begin to question any sustainability here. For the DPP Grain Desk, this has been Dwayne Lowry. Thank you.